Welcome back here with us on Corporate Radar, and time now to talk to the next company on our radar. CE Infosystems, or MapMyIndia, is the next one that we're looking at. The company's board has approved a 500 crore rupee equity fundraise. This is going to be through the QIP route. To talk about this and, of course, plans ahead for the company in 2024, we have with us Rakesh Verma, founder and chairman, as well as managing director of MapMyIndia. Mr. Verma, thanks very much for joining in. Season's greetings to you. Wish you a very, very happy new year to begin with. Now, if you could just explain to us why the need to raise more equity funds. I think the QIP enabling sort of resolution is 500 crores, if I'm not mistaken. And you already have cash on the books. If you could just tell us what's the latest cash position, why you're raising this money, and what the plans are.
Thank you so much for me being on the air today with CNBC. Well, to answer your question straight, we have approximately 450 to 500 crores in our cash and cash equivalent in our books today. Your second question relates to why we are raising funds. See, MapMyIndia has always from the past looked forward to a long-term business growth. And you have seen that 20 years back, we could think of getting into mapping business, a digital map, which is paying us a dividend today. We are again looking forward to the next 5-10 years. So when you think like that, you better plan your activities accordingly. So in our case, when we figured out that the future business growth, long term I'm talking about, would be coming from the international market, will be coming from the drone business. These two are the B2B and B2B2C business growth opportunity. And we want to get ready with that, and hence the need for the QIP.
The growth opportunities that you speak of, could they also be inorganic in nature? Because you're building a nice, comfortable war chest of, close to 1,000 crores.
Yeah, you're right. I won't say inorganic. See, when you try to think of the business growth, you look at both organic and inorganic. Like in the case of IoT, what we did go with this inorganic part also to expand our bandwidth in the IoT business. So we don't just make a decision that we'll go only organic or inorganic. It all depends on the opportunity that comes across.
Okay. Just to get some of those, growth targets, just to confirm them, 40% growth is what you were looking at in FY24. I think you're holding on to that, if I'm not wrong. And this 1,000 crore revenue milestone in the next 4 to 5 years, is that on track? And how do you plan to get to that? If you can just share, sort of a long-term strategy with us.
Sure. First, it's on track. I guess our Q3 results for FY24 will be out not too far away. That will give you one level of comfort. The second part is, when you look at the automotive business, one of the drivers for us, for which we build the technology of what we call it case on top of pure vanilla navigation. There's no doubt that the electrification of the vehicles, two-wheeler or four-wheelers, are happening at a very fast pace. That's one of our driver growth for us. The second is when you look at the connected services with the internet in every vehicle, that's adding or giving us the power of growing our business in that sector. Finally, if I say that for safety features in any vehicle, ADAS is becoming popular. So between all the three, the automotive OEM business is poised for a huge growth as the time comes by. So that will help us. Part of it will help us achieve our target of that 1,000 crore what we have talked about, built on the technology that we have already done.
Is there scope to, increase your margins further? I mean, you had a very strong performance in the last couple of quarters, clocking in anywhere between 43-44% margins. But you have given a guidance of, I think, 40% by the end of the year. But over the next couple of years, right, just trying to understand a long-term strategy, is there scope to increase margins substantially from these levels?
Look, margins can be easily increased. It all depends on how you want to look at the future of the business. We try to invest that additional margin into creating new products or technology. And that's why we have given a normal 40% kind of a margin guidance.
All right. Hi, Mr. Verma. Nigel on this side, and good to see you in. Just to reconfirm, sir, in the first half of the year, you'll have grown by 27%. For the year, you're guiding for 40%. Means the second half of the year, you have to grow by 50%. Just confirming, that's on track, right?
Very much on track. We are not.
Right.
H2 is always much better than H1.
Got it. Now, just wanted to confirm that, sir, because the asking rate is 50% for the second half of the year. Let's get that out of the way then. Now, with regard to this utilization of this 1,000 crores, by when will you come up with a detailed plan? Because the street would like to know, right? You've got big ambitions, you're looking at scaling up revenues in the next few years as well. So by when could we get a detailed breakdown? Say, out of this 1,000 crores, how do you intend to use it?
So let us put it in two parts. One is what we have already discussed, the 1,000 crore milestone for a roadmap for the next 4 or 5 years based on our maps and IoT business for the domestic market. What we are talking about, the additional 500 crores, is for the international market and drone as a service business. Now, when you look at them and building up the technology product and creating the market for them, so that's for the not the next 5 years, that's for the next 10 years I'm talking about. That is how the overlap is there. So if you're asking about the breakup, I'm giving you the breakup. I gave you the breakup.
Okay. All right. So we'll leave it at that. Thank you so much for joining us. Appreciate your thoughts here on CNBC TV18 and all the best for this year. So that is MapMyIndia with a 1,000 crore revenue target over the next 3 to 5 years. And of course, very optimistic on the way forward. But